Welcome back to another Senior Learning Institute's educational moment, where older adults and their loved ones turn for honest and straightforward information. In just a few minutes, you'll enjoy bite-sized, easily digestible nuggets of knowledge, empowering you to make the right decision the first time. So without further ado, here's our founder, certified senior advisor, seniors real estate specialist, nationally syndicated podcaster and speaker, the advocate you can trust, Mr. Ted Gottlieb.
There are a lot of older adults who like the idea of no longer making mortgage payments or being able to access the equity that they've built in their home while staying put. There's no better person that I know to talk on the topic than Dennis Cooper. Dennis has a financial planning background and in my mind is the name in reverse mortgages, not only here in St. Louis, but nationally. Dennis, let's start with the basics. What is a reverse mortgage and why does it have a nickname?
When this product was developed about 29 years ago, the product is actually a home equity conversion mortgage. We take the equity you build up in your home, convert it to a mortgage, and give you the money tax-free. If you think of a conventional mortgage or a home equity line of credit, you borrow X amount of money from the bank, and each month you're expected to pay that balance down. With a home equity conversion mortgage, you never have to make payments, so instead of the balance going down, interest accrues and the balance goes up. Just the reverse of a conventional mortgage, hence the nickname reverse mortgage. So it's nothing more than a home equity loan with flexible payments available.
Got it. So what's the nickname? HECM, is that right?
Home equity conversion mortgage, or a HECM.
Yep. Got it. How long have you been focusing on reverse mortgages?
A little over 12 years now. I tried retirement. It didn't seem to take on me, so I can only play golf once or twice a week. And I found this delightful product working with probably the nicest people in the world. All of them have stories to tell, and most of them don't have enough people to tell them to. So I love listening to other people's stories and helping them resolve the situation that we're faced with today. Right. Everyone's living longer than we expected. Everything costs more than we expected, and medical science is doing a bang-up job bankrupting Americans. This product allows people access to a tax-free bucket of money they didn't know they had.
Right. I love the your background as well as being a financial advisor, financial planner. It makes all the sense in the world because oftentimes when people start talking about how they're going to afford either downsizing, going to a different home, or going into senior living of sorts, it really makes a difference when you have a team involved, and that team often involves a financial advisor, yourself, and a elder law or estate planning attorney. So your background is just perfect for this. You know, you and I have done seminars together in the past, and when I've seen you do seminars as well, you ask the attendees to raise their hands if they've heard anything negative about reverse mortgages. What are you hearing, and how do you respond to that?
Yeah, it used to be half the room would raise their hands. Now, since Tom Selleck's helping me a great deal, only 3 or 4 people are raising their hands, but they're coming up with the same 2 things. One, the bank will take my house. Well, if you think about it, the longer you stay in the house with a home equity conversion mortgage, the more interest the bank is going to earn. Why would we ever take your house? If you don't pay your property tax, the county could take your house, but we're not going to. The other thing that people usually say is, well, it's more expensive than a conventional mortgage. Well, it is. It's a fully insured home equity loan. Have you ever purchased insurance and not paid for it? This is a fully insured home equity loan. Hence, it's a little more expensive than a conventional mortgage, but it does protect your heirs from ever having a loss.
Well, how does that work?
Basically, what we do is we ensure that if the loan is upside down, the heirs can't lose more than 95% of whatever they sell the house for. So that even in the worst case scenario, they're still going to get 5% of whatever they sell the house for.
Does that include real estate commissions as well?
No. You're going to have to go negotiate that.
Got it. Okay. So that 5% will probably cover the cost of selling the house.
Sure.
Okay. Got it. Dennis, what if someone wants to apply for a reverse mortgage? What's the process?
Before they can actually apply for one, they have to have mandatory counseling from a HUD-approved independent counseling agency. We provide them a list of about 10 or 12 firms that have been approved. And basically it weeds out people who potentially aren't competent enough to understand what they're getting involved with. It protects the public. Once that's done, we do a financial assessment, making sure they're going to be able to make their future property tax payments and things of that nature, because we don't want them to lose their home. We do an application. Title company arranges for an appraisal to come in. The appraiser comes in, does an appraisal, goes into underwriting, comes out of underwriting, clear to close. It typically takes about 5 to 6 weeks to go from the time they have their counseling to the time we can actually close.
Okay. What about closing costs and things along those lines? Are those paid up front? Do you roll them back into it? How do you deal with that?
The only thing people have to pay for up front is the appraisal fee. Everything else is rolled into the loan. They can make payments, but it doesn't make sense to make payments up front. It's best just to meld them into the reverse mortgage itself.
Got it. That's great. So I want to remind everybody we're talking with Dennis Cooper from the Federal Savings Bank about reverse mortgages. Dennis, let me ask you this. What are some of the more common ways that reverse mortgages are being used?
Well, typically when people think of a reverse mortgage, they think of taking equity out of the house that they're in. And you can do that either by lump sum, a guaranteed monthly income, or a line of credit. The line of credit's my favorite way of doing it. But about 8 years ago, HUD came out and said, how about using a reverse mortgage to purchase a home? It used to be a client would have a 3-story house. They didn't like going up and down the steps. You'd help them sell that and create a bucket of money. They wanted to buy a $200,000 villa. Their two choices were take that entire bucket of money you got them to purchase it outright, or take part of it for a down payment and have a mortgage payment. Well, any person 62 years of age or older realizes they don't want to tie up all their liquid capital on a house, or they don't want to have a mortgage payment. So HUD allows us to use the reverse mortgage to purchase a new place. You still help them sell the 3-story house, create a bucket of money. I look at a $200,000 villa. At 65, I can lend about 50%. I show up at closing with a check for $100,000. The client shows up with a check for $100,000, part of the money you got them from the sale of the 3-story house. They purchase, move into, and live in a $200,000 villa, having paid $100,000, and will never have a mortgage payment as long as either of them live in the house. In essence, you're buying real estate at 40, 50 cents on a dollar, because keep in mind, the older you are, the more I can lend.
Well, it seems as though, Dennis, that reverse mortgages are becoming increasingly popular, accepted more. You mentioned Tom Selleck, who seems to add instant credibility to it. But any other reasons as to why you feel as though the popularity and acceptance has been enhanced recently?
Yeah, I think the mere fact that FINRA, which is an organization that controls financial planners, about 8 years ago did a 180 and recognizes that if you're doing a fiduciary role with your clients and you want to do a holistic financial planning, you have to consider equity you build up in your home, or you're ignoring potentially a majority of the assets the client has approaching retirement, the equity they build up in their home. So why not use it?
Right. Yeah. It seems as though as long as people can get beyond the fact that they're ultimately giving up that equity, and so that they're not leaving it as part of their legacy, I think it makes a whole lot of sense to seriously consider. And I've often heard from children as well, as that they'd rather have mom and dad, use their own money and pay for their care. That's what they've earned over the years, and don't worry about me, I'm good.
Yeah. The other thing is that sometimes seniors will say, well, I want to leave the house to my kids. Like, this is a great idea. If you think about it, you live in a house for 20 years. The kids aren't looking to live in the house. They're looking for a transfer of wealth. Well, in order to transfer the wealth, they're most likely after 20 years, they're going to have to replace the bathroom, upgrade the kitchen, a new roof, new floor, paint, sales commission. How much is really left for the children to get as a transfer of wealth? And if you go on Medicaid, Medicaid gets first crack at the house. So if you want to transfer wealth, there's a fairly new product out in there that you might want to take a look at, something called life insurance. Probably the best way to transfer wealth rather than the house.
Right. Well, that makes sense. Well, I have covered the questions that I have for you. Do you have anything else that we didn't address that you want to share?
No, I think we were pretty complete.
Pretty concise and to the point. That's what we're trying to do here at the Senior Learning Institute. Well, Dennis Cooper, I want to thank you very much for your insight. If someone wants to reach out to you, Dennis, how do they best get in touch with you?
My cell number is 636-675-1267. Unless I'm in a meeting, I always answer it. Or they can reach me at an extended email address. My first initial D, the last name Cooper, at thefederalsavingsbank.com.
Right. You also have a website page, thefederalsavingsbank.com/Dennis Cooper. So, and we can see your smiley face on there. So I encourage everybody to go ahead and do that. You know, there's one other thing I didn't mention. I want to make sure that I have this straight, is that you're licensed in every state and you can do this anywhere in the U.S. Isn't that correct?
Yeah, the bank I represent is a veteran-owned bank, and we're certified in all 50 states. I've worked in 11 different states at this point, but they assure me the other 39 are available. Obviously, Missouri is where most of my business comes from.
Well, that's great, because we do a lot of referral nationwide here within the Senior Learning Institute. So we'd love to be able to obviously refer you anywhere that anybody is listening to this. So hopefully folks will take advantage of that. Dennis really knows this stuff, and highly recommend that you talk with him. I want to thank you all again for listening to this Senior Learning Institute educational moment. At the Institute, we're known for providing straightforward and unbiased information to help you make smart decisions the first time. Our whole goal is to connect folks for the resources they need, from staying put to estate and financial planning, care management, estate sales, clean out services, home maintenance, and my specialty, selling the home for as much as possible, no matter its condition, anywhere throughout the country. If you'd like to learn more about us, please visit us at theseniorlearninginstitute.com. Until next time, my name is Ted Gottlieb. I'm a certified senior advisor, seniors real estate specialist, and the founder of the Senior Learning Institute.